Okay, so we're ready for the exciting conclusion of our Chapter 17 video lectures. This slide is showing some of the key components of the Sarbanes-Oxley Act that was passed in 2002, and pretty much some of the key components that it prohibits accounting firms from providing certain non-auditing work to companies that they audit. So basically, it provides a level of transparency, if you will, where one firm is not providing too many services to that same company. Because if you're doing their taxes and you audit them or you prepare a financial statement, pretty much you're auditing your own work. Okay? So, again, these are just some of the provisions that came away from the Sarbanes Oxley Act that was passed back in 2002. Okay? This is just a slide that shows recommendations of ways to improve accounting practices. And you see the majority was to review, change current procedures, and create to expand internal audit. So, what does that mean? So, companies have what's called an external audit, meaning that an outside accounting firm comes in once a year to audit your books and your internal control system. But an external audit is one where the company audits themselves to make sure that things are being done correctly in-house. And we feel that if they do more internal audits and that those internal audits are being done correctly, then those firms will be doing things that will cut back on fraud. So that was financial accounting. We'll take a brief look at what's known as managerial accounting, which is a separate accounting course. This class or managerial accounting focuses on information analysis to managers inside the organization to assist them in decision making. Decisions about cost of production, cost of marketing, preparing and controlling budgets, minimizing their tax liability. So managerial accounting is all about decisions that have been made from an internal standpoint. Okay? So I mentioned auditing. What is auditing? Auditing is the review and evaluation of the information used by companies to prepare their financial statement. So when a company again has an outside audit done, its purpose is to say, did that company follow the accounting rules when they prepared their financial statement? The audit needs to be independent. It's an evaluation and an unbiased opinion about the accuracy of a company's financial statement. So again, the outside accounting firm should not be biased. Their decision about that firm should be based upon the actual audit work performed by that accounting firm in evaluating the information the company provided to support the information shown on their financial statement. So audits should not only examine the financial health of an organization, but also its operational efficiencies and effectiveness. So because of the Sarbanes-Oxley Act, when an audit takes place, they also audit what's called their internal control policies and procedures. We'll look at the documentations such as job descriptions. It'll take a look at how you're doing things just to make sure the company is operating in an efficient, excuse me, and an effective manner. Fraud. What is fraud? Well, fraud is any illegal act that is conducted by an employee or an actual business. All right. So we have a new type of accounting called forensic accounting. Okay. These accountants' job is to sniff out financial irregularities. So in essence, they're looking for any type of fraud taking place within companies. That could include investigating inflated sales figures, money laundering, and inventory fraud. So forensic accountants are often employed in law enforcement or as independent fraud examiners. So if you like accounting and want to be in law enforcement, the FBI has an agency or a department, if you will, known as forensic accounting. And their job is to investigate fraud and corruption within individuals and within corporations. You ever heard of a guy by the name of Bernie Madoff that had a Ponzi scheme going on where he frauded people out of millions of dollars? Well, guess who investigated him? Yep, it was the FBI and their forensic accounting department. Okay, tax accountants. So, actually, my background, I'm a licensed CPA, and my background is in taxes. So, the tax accountant is an accountant that's trained in tax law, responsible for preparing tax returns or developing tax strategies. Now, I would say this to you all. I know this is a business course, but if you want a profession that's very rewarding and where there's always plenty of jobs, you might want to think about coming to the accounting profession because there are many areas of accounting that you can work in. A little plug for the accounting industry. There's governmental and not for profit accounting, as well as for profit accounting. So there are accounting systems for organizations whose purpose is not to make a profit, but provide a service. These companies are known as not for profit organizations, whether it's the Red Cross, United Way, Kidney Foundation, Salvation Army, examples of different not for profit organizations. Again, their intent is not to make money, but provide some type of service or services to the general public. They have their own set of accounting principles known as the Government Accounting Standards. There's a group called GASB, that's the Government Accounting Standard Boards that develop the accounting principles for not-for-profit accounting. If we're talking about for-profit accounting, that group is called FASB. The Financial Accounting Standard Board sets the GAAP principles for-profit companies, but GASB does the rules for not-for-profit accounting. Okay, so here we have the National Park Service, which is a nonprofit or is a governmental agency, and this organization employs accountants, auditors, and financial managers. So if you're looking for a rewarding career, there's private accounting, there's public accounting, and there's also government accounting. So there's quite a lot of different positions within the accounting professions. I want to show you one last thing before we conclude this discussion. And then let me go to, should have been ready for this. Don't want that. Not that either. Hold on. Sorry. Well, I thought I had it up already. I'm sorry, I have it here. Here we go. So here we have a sample of a financial statement. Here is a income statement for the Walmart company. And what the income statement shows us, I'll blow up a little bit. The income statement shows the revenue. It shows their sales, total revenue. It shows their cost of goods sold. They call their cost of sale to get their operating income. It then shows all their different types of expenses from sales, general, admin expenses to determine their income before income taxes. And again, these numbers are in billions, people, which means, I'm sorry, in millions. So there are 6 zeros behind this number. Therefore, for Walmart, they're saying they had total revenue of $611 billion in the year of 2023 alone. And here we're saying that their overall net profit, and again, this number has 6 zeros behind it. So they're saying that their net profit in 2023 was roughly $11.6 billion. Excuse me. So this is known as an income statement. I went a little too fast. This next thing I want to show you would be the show you the balance sheet. Well, this is statement of cash flow. Let me come back to that one. Almost done. Where's the balance sheet? Here's the balance sheet. And notice that the balance sheet shows you, it shows your assets divided between current assets and other asset category to get your total assets, followed by their liability sections and their stockholders' equity section. But notice that their total assets, 243,197, has to equal total liabilities plus their owner's equity. And then last, their statement of cash flows. I'll show that statement. This statement shows the cash that came in from operating activities. Net cash provided, meaning that was an increase in cash. It shows the cash from investing. If it says net cash used, that was a decrease in cash. And the cash from financing. And again, if it says net cash used, that means a decrease in cash. So overall for this year, and again, these numbers are in millions, their cash balance decreased by almost $6 billion in the year of 2023. So these financial statements provide us with different information about a business organization. They are very useful to determine if we want to invest in a company, loan them money, work for a company, become a customer. So these statements are very important in order to make a decision about a business organization. Okay? That will conclude our lecture over chapter 17. I hope you all have enjoyed this information. Goodbye.